Let's talk about the US dollar, the world's heavyweight champion of currency for decades. It's been the backbone of global finance, but in 2025, that confidence is cracking. Wall Street's alarm bells are blaring, and it's not just one eccentric billionaire panicking, it's every major investment bank. When the optimists start sounding like doomsayers, you know something's wrong. The trust that's propped up the dollar for nearly a century is eroding fast. Imagine the global financial system as a Jenga tower, with the dollar as the base block. Now that block is wobbling. The panic is real stubborn inflation, a bloated stock market, and questionable political decisions have created a perfect storm. The world is looking at America's financials and seeing reckless spending and little to show for it. This isn't just a Wall Street problem, it's a problem for everyone. The dollar's role as the world's reserve currency is under threat. If confidence collapses, the entire system could come crashing down. The stakes, your savings, your job, and the price of everything you buy. The dollar's dominance is no longer guaranteed. Let's talk capital outflows. Money is stampeding out of the US for the first time in over a decade. Investors are voting with their wallets, pulling hundreds of billions from US markets. This isn't normal market ebb and flow, it's a one-way exit. Treasury data shows a record $150 billion net outflow last quarter alone. Why? Investors see a risky landscape, an overvalued stock market, ballooning government debt, and a Federal Reserve trapped by tough choices. They're liquidating American assets, not just trimming portfolios. When foreign investors sell, they convert dollars to their own currencies, flooding the market and driving the dollar's value down. The dollar has already dropped over 10% against major currencies this year. This is a massive vote of no confidence in the US economy. The party is over. Investors are looking for safer ground. The impact is immediate: a weaker dollar, higher import prices, and more pain for American consumers. This capital flight is a warning sign the world can't ignore. The US is no longer the automatic safe haven. The consequences are global and the clock is ticking. The exodus is just beginning. Welcome to the everything bubble, where prices soar but real growth is nowhere to be found. Years of cheap money and government stimulus, inflated stocks, real estate, and even crypto, but the sugar high is fading. Now we're facing stagflation, stagnant growth, and rising prices. Over 70% of economists see stagflation as the top risk for the US this year. The S&P 500's price-to-earnings ratio is at dot-com bubble levels, dangerously disconnected from reality. Any shock, a geopolitical event, a major bankruptcy, or a bad Fed report, could topple the whole house of cards. The bubble isn't just in stocks, it's everywhere, making it hard for investors to find safety. Bonds aren't the haven they used to be, with inflation eroding returns. Wall Street's panic is spreading because there's nowhere left to hide. The exits are crowded and everyone's rushing to get out first. This is more than a correction, it's a systemic threat. The US market's fragility is now on full display. Let's talk tariffs, the solution that's made everything worse. The latest round of tariffs was supposed to protect American jobs, but it's backfired spectacularly. Tariffs are just taxes on imports, and those costs get passed straight to American consumers. Suddenly, cars, appliances, and groceries all cost more. It's a hidden sales tax paid by everyone. Other countries retaliate, slapping tariffs on US goods, hurting farmers, tech companies, and manufacturers. The result? Higher prices at home, fewer exports abroad, and a trade war that fuels inflation. Supply chains are disrupted, businesses delay investments, and job growth stalls. The U.S. Chamber of Commerce estimates these tariffs could cost over 1 million jobs in 2 years. Instead of protecting industry, tariffs are strangling it. They're pouring gasoline on the fire of inflation and economic slowdown. Investors see this as a self-inflicted wound, and they're running for the exits. The trade war is making a bad situation worse. The US economy is bleeding confidence. Tariffs are a costly mistake we can't afford. Spare a thought for the Federal Reserve, they're in an impossible spot. To fight inflation, they need to raise interest rates, but the economy is already weak. Raise rates too much, and they risk triggering a deep recession. Layoffs, closures, and pain for everyone. Do nothing or cut rates, and inflation could spiral out of control, destroying the dollar's value. It's a lose-lose scenario. Damned if they do, damned if they don't. Every policy move is fraught with risk, and the margin for error is zero. Investors are terrified because there are no good options left. A policy mistake now could trigger a systemic crisis, not just a downturn. This uncertainty paralyzes markets. No one wants to bet on the US economy. The Fed's choices could make or break the dollar's future. The world is watching, and confidence is slipping away. The stakes are enormous: your savings, your job, your future. The Fed is juggling knives in a hurricane, and everyone could get cut. The fear is real, and the risks are rising. The dollar's fate hangs in the balance. If billions are fleeing the US, where's it all going? Investors are scrambling for safety, and their choices reveal what they value now. First stop, gold. Once dismissed as old-fashioned, gold is up over 20% this year. Investors want something tangible, immune to government blunders. Next, foreign government bonds, especially from countries like Germany and Japan, where fiscal management looks steadier than America's. US Treasuries are no longer the world's safest asset. Investors are seeking stability elsewhere, even for lower returns. Finally, select emerging markets, India, Brazil, Indonesia, are attracting capital thanks to strong domestic growth and less exposure to US turmoil. These markets offer growth without America's baggage. The global diversification away from the US is accelerating. This isn't just a blip, it's a long-term shift. The world is no longer betting everything on the dollar. Investors are hedging their bets, and the US is losing its safe haven status. The message is clear. Trust in the dollar is fading. The global financial order is changing fast. The scramble for safety is reshaping the world economy. It's one thing for investors to quietly leave the US. It's another when they start betting on its decline. Hedge funds like Bridgewater Associates are building massive short positions against US stocks and the dollar. Shorting means betting prices will fall. It's the ultimate act of financial pessimism. When the smartest players make these bets, others follow, triggering waves of selling and panic. This can quickly spiral from a correction to a crash. We've seen this before. In 2007, a few savvy investors shorted the housing market. Then came the 2008 crisis. Now, the big short is against America itself. These moves are a red flag for global markets. Large-scale shorting can become a self-fulfilling prophecy, fueling more fear and selling. The implications are chilling. Trillions in wealth could be wiped out. The world is watching the smart money and following their lead. Betting against America is no longer fringe, it's mainstream. The stakes have never been higher. We've always lived in a dollar-centric world. Commodities, trade, and reserves all revolve around the greenback. This exorbitant privilege let the US borrow cheaply and run deficits without consequences. But that era is ending. China is leading the charge to build a parallel financial system, reducing reliance on the dollar. Bilateral currency swaps, UN-priced oil contracts, and new payment systems are challenging the dollar's dominance. Russia, India, and Southeast Asian nations are trading in their own currencies. Even Europe is pushing to strengthen the euro's global role. The motivation is clear. No one wants to be hostage to Washington's decisions. The current crisis is speeding up this shift. The dollar won't lose its crown overnight, but the foundations are shaking. For Americans, this means higher borrowing costs and fewer cheap imports. The US will have to live within its means, no more free ride. The global order is changing, and staying informed is essential. The rise of the rest is here, and the world will never be the same.